Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, February 25th. Okay, what I want to do this morning is take you through the 10-year bond and the bond yield. That's been a focus here lately. I want to take a look at some commodities and then get into our regular chart deck of indexes and FATMAAN names. So yesterday, early on, pre-market, we had yield spike into the 1.43 area before they backed off in the regular session, and that kind of prompted an early day sell-off. It seems like for the last couple of days I've been doing the same chart deck again and again and again with the technology stocks, the the QQQ, the NASDAQ, selling off. The other day it was a 4% sell off. Yesterday it was 1.5% sell off. And then they buy it up in the regular session along with the SPY and the IWM. Now, here this morning in the pre market, again, yields are rising. And on the 10-year, we hit a new low pre-market down in this 139 area. You can see this was our descending triangle. This is our measured move target, 138. And that corresponds, I should have mentioned it back here on the yields, 150, 1.50 is resistance on the 10-year bond yield. So I would imagine, if we're in this 1.3, 1.44 area, that, we may have some upward travel up to 150, but then I would expect a cap there for a while, for some consolidation. I doubt that it simply waltzes right through 150, because if it goes through 150, it's going to 165. That's the next level of resistance. So I would view this area between 150 and 165 as a consolidation zone. And then if it pops above 165, it'll be gone. But I don't think this is going to go straight up in a straight line. I think we'll see some consolidation below 1.50 and then potentially a pop up into this 1.5, 1.65 band, and then we'll really find out what's going to be going on going forward later in the year if yields do in fact pop 165. So back here on TLT, we've got this large volume over price bar down here around 136, and so that would be the low side of our target here. Now, if you're part of our group, you got a note from me yesterday that we had been in the March 147 puts, and I suggested that being so deep in the money that you roll those down and pick up the April 140s. Take this money to the bank and then roll down, buy an extra month, and see if we can get one final push up to that 150 yield or down to this 136. Now, yesterday, I went ahead and spread my April position. I sold the April 135 puts. So I have an April 140, 135 put spread on TLT. And what I'm hoping to have happen is, for this to make a push down towards 136, stabilize, and then have that 135 expire, worthless. And so I've got a $5 spread on for practically nothing because I had, already rolled down to the 140s. And then with that push yesterday, those went in the money. So selling the 135s seemed like a good thing to do. If yields were to or to back off a little bit and take some time to consolidate. So, I'm looking for one more push lower down into the 136 area. Now let's look at some commodities. This is copper. I mean, this thing is going GameStop. If you get my drift, this is not normal. I was listening to a podcast the other day, and apparently there's been a whale in China that has put $4 or $5 billion on bullish copper bets over the last 2 weeks since coming off of the Chinese New Year. So what's been happening is during the Asia session, copper jumps up as these bets come online and then kind of dribbles lower in the European and US sessions, with some profit taking, and then the cycle repeats again. But this thing has gone from 350 to 430 in less than a month. And that's insane. That's insane. So I'm anticipating a pullback. I do expect copper to go higher, but we've got to get a better entry point than just trying to jump on this train. There's a lot of risk in it right here. And I thought it was interesting, in the last few days, Southern Copper and Freeport FCX have not reacted to the gains in the raw copper prices, and you would expect them to do that. So, I've been watching those two names in conjunction with the copper price to kind of gauge what's going on. And I found it interesting that those are not reacting over the last couple of days with copper shooting up. I was going through some commodity charts, and coffee jumped out at me. Why? Because coffee has been in a 10-year downtrend. Let me center this here for you. We were up here $3 a pound back in 2011, and we got all the way down to 95 cents a pound here recently, and now prices have broken out. Now this is a monthly chart, so this candle isn't completed until the end of February, but that's essentially this week, right? We're going to be into March next week. So that's significant. And if you'll remember in your technical analysis work, the longer the time frame, the more important the move. So a weekly breakout would be more important than a daily breakout, and a monthly breakout would be more important than a weekly breakout. So I view this as pretty significant. Downtrends don't last forever. And so the door is now open for coffee to go on a run from a technical standpoint. Now, does that mean it's going to go straight up? No. But what it does mean is that a significant amount of resistance has been taken out. And I think it really warrants some close attention and, possibly, taking a position 6 months to a year out, and let's just see what happens on this thing, and not really try to micromanage it, but just let the longer time frame charts play out and see what kind of push we can get. And really what it reminded me of is our hero stock, our magic eraser. This is Joe. We had a 10-year base in Joe, and then we got a breakout on the monthly chart, and we got involved right in here, right around 27.50, and we bought $35 calls 8 months out, June of 21, and we bought those for $1, and they're trading like at about $20. And this is the kind of move that can happen when you get a monthly breakout of something that's been consolidating 10 years, right? So These can be explosive moves, is what I'm trying to say. Does that mean that'll happen to coffee? I have no idea. But all I'm saying is that those monthly breakouts are worth watching. Now here's the daily chart on the tradable ETF, Joe. We've got some resistance right here at 40 and a half, where it has backed off. So if you are interested in trading coffee, and we got that breakout above 40 and a half, maybe up towards 41, maybe get a longer term bullish position out into the summer months, not try to trade it too actively, and just have it be something that's tucked away in the portfolio. Because if you look at the commodity complex, really doesn't matter what it is: corn, soybeans, wheat, silver, copper, aluminum, zinc, coffee, they're all going nuts. So this may go along for the ride as well. Speaking of silver, there's been a stealth move, and this is the silver weekly chart, SLV, pushing up towards 27. If you get a breakout here, then it's going significantly higher. And that's been reflected in some of these silver mining stocks. This is First Majestic, AG, and you can see put a nice saucered bottom in here and is now pushing up towards fresh highs. But if you look at the silver miner ETF, SIL, junior miners, Pan American Silver, Mag Silver, Wheaton Precious Metals, they all have fairly productive charts, and you may want to take a look at that. And I think what's going on with silver is fairly significant from the standpoint of silver and gold usually trade together, and gold has just been in the weeds, not being able to get any kind of traction at all. And I think that has to do with the rising rates. Gold is really sensitive to the real yield, which is, the nominal rates minus inflation. And with real yields rising, that's a headwind for gold and not so much silver. So silver's doing a lot of catch up right now and moving higher. And I think if there was a precious metal that I wanted to be in, it would be silver and not gold. So let's quickly go through the index charts. Like I said, one of the things that we have been concerned about this week is the sell-off in the NASDAQ? Is that a canary in the coal mine for a broad market sell-off, or is it sector rotation where people are bailing out of the bubble stocks, the high valuation names, mega cap tech, and rotating into S&P 500 names and small caps, the cyclical names, the banks, the travel stocks, the hotels, all that kind of stuff. And so far, it looks like sector rotation, but we got to stay vigilant because, if one of these days the Qs don't bounce, the last couple days have been, kind of remarkable. They've come in, the dipsters have been conditioned to buy, and on these QQQ sell-offs in the morning and the pre-market, they come rushing back in and, buy it up. So by the end of the day, it looks like nothing has happened. Be on your toes for if that doesn't happen and it just keeps heading south, because I think it'll be tough for SPY and IWM to just, waltz higher while the Qs crater. So I've got that in the back of my mind. But like I always say, that's just a narrative. You got to go by you got to go by the levels, and the levels should inform your trading. So speaking of levels, here the SPY daily. We talked about this 385 being a key level on the daily chart, and we can see here that price has reclaimed the 20 and reclaimed the 8-day moving average. So with price above the 8 and 20 day, nothing but bullish. It has recaptured that, and with all the moving averages bullishly stacked and price above them all, that's bullish. So here I've got a level at 391.50. I think you can use that as a pivot today. If you're north of 391.50, I think you can be long. If you see a pullback below, that would be cautionary. You'll have to decide if you want to try, a tactical short. But, for the most part, being long has been the right side of the trade for SPY since bottoming out a couple days ago. Here's the 30-minute chart. And what I've done here is just for illustration purposes, taking yesterday's price action and taking a look at, decision points you could have had during the day if you're an active trader. We had been talking about 385 for a couple days, and in the first couple opening bars, you had two tags of 385 that held. So those were objective longs at that point. And so then if you missed it, here was your next level at 387. Recapturing a well-defined level from below is bullish. Could have bought there. As price moved up, recapturing 389 would be bullish, capturing that level from below. So that was another buying point. So there were three chances. You had a chance to grab it at 385. You had a chance at 387. You had a chance at 389. And now price has moved on up to 391.50. So that was a nice bullish sequence. And you never know what's going to happen during the day. All you can do is go from level to level. But what was nice about yesterday is there weren't any scary candles that would have gotten you out. It was more or less straight up the whole day. So there weren't any, pullbacks that would have scared you. Qs, totally different story. Price below the 8 and 20 day. So this is still in a bearish posture below the channel, below the 8 and 20 day, trapped between that level and the 50 day. So I would be cautious here on QQQ, and I really think price has to take out 328.50, which would equate to recapturing the 8 and 20 day exponential moving averages to jump back above this line, and then hopefully recapture the uptrend. But as long as price stays below, it's in a bearish mode. And what I've done here on the 2 hours, I've dropped in the fib retracement levels in this light blue color. And you can see here that the bounces over the last 2 days have simply brought it up to the 50% fib zone. And what that means is, right now, right here, right now, at 324 is a half back short. First move down, give half back, next move down. I mean, that's how that ABC or 1, 2, 3 pattern typically goes. Now, there's room for it to go higher, up to 326 or up to the top of the gap here at 328, or the bottom of the gap at 328. All I'm saying is price after this bounce is in the fib kill zone. The kill zone is between 50% and the 618 fib retracement. If this is going to fail, it's going to fail right in this area between 324 and 328, between the 50% and 618 retracement. So be ready. Here's the 30-minute exploded view. 324 can be your active pivot this morning. If price is above, I think you can be long. If price is below, I think you can be short. But just remember, have the prevailing trend inform your trading. So when I say above 324 you can be bullish, strictly taken, yeah, you can be long above 324. Just keep in mind that the prevailing prior trend is down. So this being bullish above 324 is a counter trend trade until price can clear these fib retracement zones. So you've got to be on your toes for price to come up and then, fail at a higher level. So just keep that in mind. Small caps have been doing great, as we've discussed. We had the look below this 217.50 and then right back up. Price was up over 2% yesterday. So price has reclaimed the 8 and 20 day. It's reclaimed its uptrend channel. So things are looking very strong for the small caps. Here's a 2-hour look. Here was, I'm not sure where the open was yesterday. I think it was right here. But on that recapture, 222, could have been long there. And, rode it higher, went straight up the whole day. Let me look at this 30-minute chart here. So we've got a very impulsive move off of the low the other day, and now price is flagging here. If price can pop 227, and if you went ahead and draw out your bull flag move, let me just do that. See if I can do that for you live. There's your flagpole, right? Impulsive move, low to high. There's your flag right there. And there's your measured move, 235. So if price can pop 227, your bull flag measured move is 235 to set up a new high for IWM. So keep 227 in the crosshairs, and I would definitely set an alarm there. It's been really strong. So, okay, moving on to Facebook. Just like I talked about with the Qs, Facebook has moved into the kill zone. I've got the fibs in orange here. Down move, high to low, bounce at the 50% halfback short, where you can see it has had several tries and has failed. Now, today, if Facebook gets it together, you can be long against 266 if it breaks above, and you've got your resistance levels here. But if it stays below, you can be short against 266 or 265, depending on where you get in, and then look for a move back down towards a back test of this 254 level. Apple's been in the weeds. It has not even bounced. I mean, if you caught this move here from 118, yeah, it bounced. That was a nice move. That was a nice day trade for you. But big picture, it's trapped in this downtrend. And until it can even clear this 126.50, 127, I personally wouldn't take it on the long side, and I would get concerned here below 123.50, because I think if you lose that level again, then you're coming back to 120, even 118 to back test these lows from the other day. Very weak chart. Tesla. This is the plunge. Tuesday. I think that was Tuesday. Here's the bounce back. The real breakdown came when price lost the trading range between 800 and 880. So here was the first move down. Here's your bounce back. Notice that all that has happened is price is back to the top of the downtrend channel. This being an overshoot and this coming back in. So I would be using 735 as your pivot. And if price can, move back above this channel, then I would imagine it would go up to 770 and test this little gap here. And if it can move through that gap, come up to 800 for a legitimate back test of this breakdown. And then that would be a really important level. Kathy Wood's out there pumping every day. Everybody's on board with, Tesla, but it's still got a decent amount of work to do to get out of this bearish downtrend channel. Microsoft, again, a weak chart. It's gotta get back above this 236 right here. And really, I mean, if you want to look bigger picture, it's got to get into this gap here at 238 and then fill it to 241 to get back on track, because it's been pretty lethargic. I mean, it was up 0.5% yesterday. I mean, that's tough trading. And these names have all been really heavy. So be careful. And, I don't really think it's, a lot of these names are the place to be for active trading right at the moment, unless you got some alarm set for a downside move. It just seems like these mega cap names have been pretty heavy, and that can be a frustrating trade when you're, keep trying to shoot long, and they just sit there, all day and just, oscillate up a few pennies, down a few pennies. That can be frustrating. So don't get yourself in a predicament with these names. They're just they just don't look like they're ready. Amazon, another prime example of that. I mean, off 1%. So just, oscillating here around 31.50. That's your pivot level. Above 31.50, you can be long. Below, you can be short, with $50 targets on either side for the free 50 club. That has worked great, but it's just a matter of how fast it's going to get there, right? If you're sitting in a weekly option that expires tomorrow, I mean, you can watch the theta decay, on your wristwatch. It will become significant. So you've got to get a move pretty quick once you take a position if you're using, weekly options that expire tomorrow. Google did recapture this 2075 level. You can be long above and short below. So we've recaptured the midpoint of this consolidation range, which is a bullish event, no doubt about it. But in order to really get going, it's got to get back above 2100 and recapture this breakout area for it to move higher. One stock that I think warrants some extra attention within the FATMAAN group is Netflix. Notice the posture is totally different than the other names. Here we've got an impulsive move off of the low with a consolidation right below a well-known resistance level. Resistance, 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 resistance. Support, 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 support. Resistance, 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 resistance. So 554, alarm that level. Be ready to take it long if you get a pop out, because look, just like that other one we just did on the bull flag setup, you've got an impulsive move with a consolidation. You could take the measured move, and that will point to a price up towards 580, just eyeballing it from here to here. So be ready to take Netflix long. I don't know what's going on, but it's acting totally different than, you know, the Apples and the Facebooks and the Microsofts. It's got a much more constructive chart, and I think you can make some money on this one if Netflix decides to move and break out of that bull flag consolidation under 554. Last chart, Sun Power. I had taken a short. Maybe you followed me, maybe you didn't, but I had taken a short on this breakdown below this well-defined trend line, and price has since kicked back to back test this trend. I'm still short. Obviously, I'm underwater. I will close that position today if it's green. You know, if it pops back above this trend line, I'll take my loss. If it's red, I'll stay in the trade, because that'll look like a breakdown back test and then fail if it's red today. And the redder the better. You know, the bigger the red candle, the more convincing it would be that it was rejected. So, but we've got declining 8-day and 20-day EMAs there. So those will, even the 50 looks like it's right in there as well. So there's a lot of overhead resistance right here. I'm still hopeful that trade pans out, but if it can chew through and put in a green day today, I'll probably close that trade. Okay, long video. It's 7:30 as I'm wrapping it up. Let's watch the cues today. You know, do they sell it off and bounce it like they have been, or does it, you know, continue to head south? The SPY and IWM continue to be strong. No sell signals, not even close. In fact, they're both very bullish, having reclaimed the 8 and 21 day exponential moving averages and their uptrend channels. So they look strong. Watch bonds, the yields. Commodities are on fire. Keep coffee in the crosshairs. Look at silver and the silver miners. I think there's some productive looking charts there. So if you're new to the channel and you like the information, please hit the subscribe button and the alarm bell. You'll get a notification when I publish new video content. And also look over in the show notes for links to the blog, where you'll find a lot of articles and extra information on the markets, how-to articles, a lot of stuff on trading psychology that traders find helpful, along with a link to register for all my content. And if you do that, you'll get a nice, neat email each and every time I publish anything right in your email box, and you won't miss a beat. Plus, you'll get an invite to the trading room and join our growing and rather vibrant community of aspiring traders that are all working hard to get better. Lots of good ideas in there, way more than I can come up with on my own. A lot of sharp traders, a lot of positive traders in there, and we'd love to have you join us. So have a good start to your morning. This has been Chris Buss with Traders Profit Compass. Talk to you next time.